Hi everyone, let's cover my Elliott Wave analysis on Cardano. Starting on the weekly time frame with the bullish scenario, we can count a finished impulse to the upside as a wave 1 with internally a 5-wave structure, followed then by a finished wave 2 with internally a double zigzag, which is labeled as an ABCW, triangle in a wave X and another ABC in a wave Y to finish wave 2. After wave 2, we are looking for strong continuation to the upside in a wave 3 to take out the all-time high, and preferably a wave 3 starts with a multi-1-2, which is what you see here. We have a wave 1 to the upside, followed by a corrective structure to the downside in a wave 2, a double zigzag WXY, followed by another wave 1 to the upside and another WXY to the downside, and preferably your wave 2 is finished here and you are looking for continuation. Now, continuation could mean you're going to move into a wave 3, but of course, we can print another wave 1, 2, and then continue to the upside in eventually a wave 3. The invalidation for this scenario is the low here at 0.51. Preferably, price is not going to create a larger corrective structure here in this wave 2, because from a time perspective, this wave 2 is already quite long. We can take a fib time from the start to the end of this wave 1 here, and then you can see that this wave 2 is 161% the time of this wave 1, which is fine for a wave 2. We don't really like wave 2s to get too long. And if we're going to form, like, for example, a flat, a larger corrective structure here, or a WXYZ or whatever, you're going to move into a 3 or a 4 or a 5 fib time, and it's going to lower the probabilities for a multi-1-2. So preferably this low holds, and you're going to continue with a bullish market structure with 5 waves to the upside, followed by 3 waves down. 5 waves up, 3 waves down, and eventually get a big push to the upside in your wave 3. If we then go to the daily time frame and have a look at the most recent move towards the upside, then here we can count a finished impulse to the upside, 1, 2, 1, 2, 3, 4, 5, 4, 5 to finish a wave 1. Zigzag down in a wave 2. This could be the end of your wave 2, after which you look for continuation. But mind you, this wave 2, on the other hand, is relatively short. It did end after the minimum target for a wave 2, which is the 0.382 fib time. And you can see the low was created after the 0.382 fib time. So that is fine. But then we like price to move towards the upside and now touch the 1.618 here at 1.090, because if you do, then the probabilities are much higher. You have a finished wave 2 over here. As long as you don't hit the 1.618, there is always that possibility of potentially this wave 2 becoming a larger structure, like for example a flat ABC, after which you look for continuation to the upside. And if I then open some areas of support, we do have some interesting support here at 0.7, as you can see, and also here at 0.63. It requires quite a big move to the downside, of course, but at least we have to be aware of the potential of this wave 2 extending in time into a larger structure. But for now, I put it here as price is moving to the upside. You can also see price here is moving to the upside and volume is increasing, which means that when we take volume into account, we label this structure either as a wave 3 or as a wave C with internally here a WXY double zigzag in wave B of a flat, and then ABC. That is your quote-unquote bearish scenario, but then still after C, you look for price to continue towards the upside anyway. Of course, in a wave 3, you just want to see continuation and price touching that 1.618, okay? And then we go to the weekly time frame once again and look at the bearish scenario. Every Elliott Wave analyst needs a bullish and a bearish scenario. And you can see that in the short term, there's actually a little bit of overlap, because even in the bearish scenario, you would look for price to move towards the upside. But if you take out this high here, which is the highest probability, this high here at like 1.33, right? That is when things start to be very, very interesting, because in the bearish scenario, sure, we count the same impulse to the upside, right? This again is going to be a wave 1, but now your corrective structure did not end at this low. Instead, we count an impulse to the downside here, 1, 2, 3, 4, 5, that's wave 1. This is wave 2, right? Then we have our wave 3, wave 4, wave 5. Wave 3 is longer than wave 5, which works, because the only rule in Elliott Wave with regards to wave 3 is that wave 3 is not allowed to be the shortest, and it is longer than wave 5. Now then, we have to end wave A over here. We cannot end an impulse here, right? So this has to be a corrective low, which then is wave A, wave B, and this 5-wave move up is now a wave C, which gives us a W, right? Because now we're looking for a complex structure to the upside. We have a flat structure in a wave W, a double zigzag to the downside in X, right? W, X, Y in a wave X. And then in wave Y, we would look now for a zigzag to the upside. So you have your 5-wave structure. On the lower time frames here, you can find your wave 4s, but this is your 5-wave move up in a wave A. Preferably your wave B is finished, just like with the bullish scenario where preferably your 2 is finished, preferably your wave B is finished, and you are looking for a 5-wave structure to the upside, right? 1, 2, 3, 4, a 5-wave structure where the target area for your wave Y would be over here between 1.327 and 1.988. The invalidation for the bearish scenario is taking out the all-time high at 3.160. Now in this case, we finish a 5-wave structure and then the retracement to the downside has to be impulsive, right? Or I should actually say motive, because it can be a diagonal as well, right? Impulsive would be 1, 2, 3, 4, 5. That's your wave 1. You get a 3, 4, and a 5, and then continue to the upside. Or you create a diagonal, 1, 2, 3, 4, 5, correction, right? And then you get this, where your diagonal is your wave 1, 2, 3, 4, 5. And after wave 5, you still look for price to continue towards the upside. So look, it is a bearish scenario as you are expecting a significant move to the downside, but after the target is reached, which is like somewhere around 1.39, 0.093, which also is a very interesting area of support over here, right? We have 2 point of control, some volume levels in this area, as well as this range, which is a lower degree wave 2, because this impulse is 1, 2, 3, 4, 5. And a corrective structure does like to retrace to either wave 4 or wave 2 of a lower degree. And this is your wave 2 of a lower degree, which means that this is a very, very interesting target if given, right? We have to wait and see, okay? But that means you want to start with either an impulse or a diagonal to the downside, right? So you need a motive wave to the downside to at least have the potential of going to the target area for your wave C. Now what you can see is a vertical line on the chart, which is a fib time, which I have taken from the start to the end of the impulse to the upside, right? That's your wave 1, to compare wave 1 in time with wave 2. And just purely based on estimation, if you would continue correcting here, move up and move down, your wave 2, because all of this is then going to be your wave 2, and then you get a 3 to the upside, your wave 2 is probably going to be around a 4 fib time, meaning that your corrective structure is going to be around 4 times the size compared to your impulse to the upside, and likely ends somewhere around July, or at least like the middle of 2027, right? After which we then look for the next bull market towards the upside. Now, a 4 fib time by no means is an invalidation for a wave 2. It is a little bit less common, but a 4 is still okay, right? So we can consider this scenario. Now, what are the bulls looking for? And this is the biggest difference. The biggest difference between the two scenarios, right, is that bears want a finished 5-wave structure to end below the all-time high, right, coming off this low, a finished 5-wave structure below the all-time high to end, and a motive wave, either an impulse or diagonal to the downside, right? The bulls, okay, are looking for either a 5-wave structure to the upside that just straight out takes out the all-time high and doesn't finish below the all-time high. But if you finish a 5-wave structure over here below the all-time high, this is like the crutch point, right? This is going to be incredibly important because this could be the top as well. However, what bulls are looking for is a 3-wave corrective structure, not a motive wave structure. So the bears are looking for either an impulse down, right, continuation, or a diagonal down, continuation. The bulls are looking for a corrective structure down. So a zigzag, right, 5, 3, 5, and then basically confirm a 3-wave structure down and maybe continues correcting, but that is absolutely fine. You look for continuation. A flat structure, that is fine. Sideways WXY, that is fine. You're looking for a corrective structure to the downside, right? Which gives you then another opportunity to join and look for that leg towards the upside to take out the all-time high. So this area here on Cardano is incredibly important, as that area basically determines the bulls versus the bears, and the retracement matters. If you finish an impulse to the upside over here, right, below the all-time high, the next leg down here, which of course we will analyze here on the channel and I will share it with all of you, but that leg to the downside is basically going to determine a lot. Now then we get to the levels. So I've already shared, of course, a couple of levels, but here you can see some time frame horizontals, right? So the purple lines are monthlies, the yellow lines are weeklies. Then we get to the weekly or monthly or range point of controls. Volume levels are my favorite levels. So yeah, I have these ones here on my chart. Then the daily point of controls, which is more local, as you can see. Currently, all of them are support, right? And that is it. So then we get to the probabilities on Cardano. And the probabilities are as follows. We are looking locally for preferably a finished structure here, right? Because of time, move up compared to the move down. It would be nicest if this over here is the end of your corrective structure, right? We can count a 5-wave to the upside. Potentially we get a bigger corrective structure, but by all means, probabilities are highest to take out this high here at 1.33. So we're looking for a 5-wave impulsive move to the upside, right? On the daily time frame. 1, 2, 3, 4, a 5-wave structure. If this impulse to the upside is finishing below the all-time high, be aware of the following. There we go again. It could be the top for the bearish scenario, right? After which we want to see a motive wave to the downside, either an impulse or a diagonal as explained. If price shows a corrective structure to the downside, right? So the bulls are looking for 5 waves up and a corrective structure down, right? Then we are looking for continuation to the upside, bullish, looking for that all-time high to be taken, right? Now this of course only matters if we actually finish a 5-wave structure to the upside before taking out the all-time high. Because again, if price just moves up and your wave 3 extends, right, and you never finish a 5-wave structure before you take out the all-time high, then of course this bit over here is irrelevant because we're not looking for that bearish scenario again. And then there's another bearish scenario which I haven't presented in this video, which would be a flat and then a wave A, B, and a wave C, which is at the moment absolutely irrelevant. That's why I didn't present it in detail. Now, as long as structure does not change over here locally, right? Higher highs, higher lows, 5 waves up, 3 waves down, very, very important. The bulls, of course, are in control. Bearish scenario would also take quite long in time compared to wave 1, probably around a 4-fib time ending somewhere in the middle of 2027, but it is by no means an invalidation. Now that being said, I hope that this video was helpful or valuable to you. On the left, you see an analysis on Solana, and on the right is the altcoin analysis playlist where you can find many more altcoin videos. Thanks for watching and subscribing, and I hope to see you at the next one. Bye bye.